everyone. Welcome to another episode of the Index podcast, where we come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, I have with me Denning, Chief On-Chain Sleuth at Pantera Capital.
Hi, everyone.
Hildobby, Resident Data House Elf at Dragonfly.
Hello, everyone.
And I am, of course, Boxer, the Community Powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We are acting independently of our respective professional roles. And with that, hey, you two, and excited to get this episode recorded because it's a very relevant topic at the moment. We're going to talk about Perp DEXs. And I think, Danning, you have like kind of like a little bit of an overview of what we'll try to cover today, so I'll give it away.
Pretty much PerpDEX is, other than stablecoin, the only other hot topic everybody's talking about, mostly from HyperLiquid's success. Starting from quite a while ago, I feel like in the beginning of the year, people have been asking, what token are you buying? And people have been like, I'm going to just hold hype for this cycle. And so I feel like a lot of people have been betting on hype. And especially also they're kind of legendary in the sense that they started with no VC money on the cap table. Right? Like every VC is like, it's such a huge success, but nobody was able to get in. And I believe now a lot of like VC is actually holding hype in their liquid fund. But that was a thing. And it was kind of relevant also because over the last weekend, there was a huge crash. I believe there was like $19 billion got liquidated. And then there was like this kind of back and forth clash between the CEO of HyperLiquid, Jeff, and the CZ, I would say a little bit, where, before everything, I feel like I've just saw a tweet about like CZ endorsing Jeff because somebody found an old picture in like 2018 or something. There was like an incubator where Jeff was hackathoning in like the Binance whatever events, and people were like, "Oh, actually, is Easy Lab? I believe that was the incubator venture side team of Binance, YZ Lab, I think YZ Lab,
Yeah, something like that.
yeah." And they were like, "Are they backing HyperLiquid?" And they came out being like, "No, it's not really true." CZ was like, "Oh, like I endorsed Jeff as a smart guy and like Hyper is a success." But then like quickly after last weekend, Jeff was like tweeting about like how much better like DeFi system compared to CeFi is, because on Binance it was like so many users were not able to withdraw and like pretty much like damaged and like suffer a lot of loss from the downtime of Binance. And I believe they even like refunded a lot of people for $100 million. But yeah, that was a pretty interesting drama to watch, but that's pretty much I think like why we want to talk about it. And there's a lot of good metrics out there, even though I believe like it came kind of late to Dune. That was a funny thing because when I was looking around dashboards, all these dashboards on Dune about Hyperliquid is like writing a query querying DeFi Llama, but still like there's good data there. But that says another thing about Dune though. Like people think it's a de facto place they want to present data, but
Also, that's the place where you can compare all of this data. And like a lot of people, it's just like you don't need to set up a website and like do all of the stuff, but rather it's just like, oh, let me write a Dune query and pull in the whatever Binance API data, the HyperLiquid API data, and then like that's my kind of like presentation model, whatever data warehouse where I do all of this stuff, which is beautiful to have that happen. But yeah, I think maybe we start at like, what is a perp? And I think we quickly tried to figure this out before the podcast. Just like everyone talks about perps and everyone's like, oh yeah, like it's kind of like an option, it's kind of like a future, but like nobody can actually really like put their finger on it. At least like, I don't know. There's a lot of smart people in this industry who've like, they have like a background in financial engineering or financial instruments or something like this. But for us mere data analysts, it's like, yeah, we like look at the data, but like in the end, it's like, oh, I don't really really know what's happening here. So I, of course, spend some time with my favorite friends in the cloud to try and understand this. And essentially, like the way I understand perps now is like you essentially like you have spot Bitcoin, and we're not buying spot. We're buying like a derivative of that, which is a perpetual future on the price of Bitcoin. And I think the kind of like, I think like this is a new thing that BitMEX introduced in, I think, 2014 or something like this. And essentially they have used all, like, in traditional markets, like when you trade stocks or when you trade options or when you trade whatever futures, you always need like clearing houses, and like not everything is basically contained within one set of infrastructure. And essentially BitMEX saw this in 2016, and then they're like, okay, but like actually we don't need options to expire. Like we can just keep them open, because like we are always going to be in possession of the collateral, basically, because you can only trade perpetuals within like kind of one set of infrastructure. And essentially what you're doing is you're not buying spot assets, but rather you're buying a derivative. And because of that, you can essentially say like, I'm gonna put down $1,000 in collateral, and I'm gonna go 50x long with that $1,000 in collateral. So like my exposure, like I'll literally, like, there's one giant order book for perpetuals, and like if the price at the moment is 60,000 or something like this, then with those 50,000, I'll basically buy like 0.83 Bitcoin or whatever the math works out to, in collateral, or like in Bitcoin from the order book, even though I've only put down $1,000. But then immediately as the order book moves against me, or like moves with me or against me, my like I will either be like my position value will grow by 2x if the price moves 2%. Then like if I have a 50x leverage open, then of course like I have made 100% gains. But then like if the price moves against me 2%, then like my entire, like I'm just gonna be liquidated. And like how this is possible, and like I think what like kind of like made click earlier is like, okay, like usually on the traditional like on traditional markets, you need like this would be contained in an option, or like in I think mostly options where you're like, okay, I believe the price of whatever copper is gonna be over $7 in 3 months, or like in whatever, like whenever this option expires. But like that needs to be the case. It needs to expire because essentially like you need somebody to clear that trade. So like the asset itself always needs to have like a value attached to itself. The position, like this one position of saying like, oh, this whatever copper is gonna be worth $7 in 3 months from now, or like on whatever, like at the end of the year. So like on January 1st, it's gonna trade above $7. Like you can kind of like, there's a price of the probability of this happening that kind of like naturally develops over time as the kind of like underlying asset price just kind of like moves independently of this. And like now with perpetuals, and like I think what BitMEX kind of like recognized in 2016 is like, because we're this exchange anyway, I can just allow users to kind of like, I can define one giant order book, and in that order book people can go long and short, and because like it's all contained within the same platform. So like BitMEX always has full like collateral of the money, right? Like I deposit my $1,000 on BitMEX, and then like that money is just in BitMEX. So like as the price moves with or against the position, like BitMEX is always in control of that money, and they can basically just like take that away computationally. Or like in CeFi, it's like, yeah, like you basically like you're trusting BitMEX with your money. And like I think that was like a very convoluted explanation, so I'll stop here and see if there's any additions that any of you can make.
I think to me, the way, like the first stepping stone to understanding like perps is futures. Futures are essentially saying like, hey, Boxer and I want to trade Bitcoin at $130,000 in a month from now. Regardless of what happens and what price it trades at this point, we'll exchange for the agreed upon price at the expiry date. And then once introducing perps is essentially a kind of twist on futures where instead of having an expiry date, it never expires. And the way that the price tracks like spot price is essentially short and long. They have like a essentially kind of like Ethereum's basis trade where there's a funding rate that essentially to track the price closest to the actual price, shorters and longers, and those who long pay the other way in order to, move the price following the oracle of the spot price. And that means that we can have actually futures that never expire or until closed or until liquidation or, ADL triggers or whatever. But yeah, essentially it allows for options that are never ending in terms of expiry as long as everything is in check. And on top, you have leverage. Is that
Is
clear?
an option on future? Oh, what is the option? What is the future?
Okay, don't quote me exactly on options. My understanding of options is always like all derivatives, but maybe that's a wrong understanding. So don't quote me on that. But my understanding of perps is like it's essentially an evolution on futures, like introduced by like some mathematician in the 90s, and then Arthur Hayes actually pioneered them in 2016 at BitMEX.
Yeah, but I think uniquely, it's like the concept of a like crypto exchange that kind of made that thing possible. Because like in order for Perpetual to work, and for like you need to be able to always kind of like claim the collateral, right? That's the problem. Like if somebody goes like 10x long or something, and then like if they get liquidated, like on traditional stock markets where it's like, oh, like we trade over the New York Stock Exchange or something like this, there's no way where you can take like somebody's collateral or something. It's like it all needs to be contained within the same platform. And like that's why we see like, okay, Binance has like a perp market, and then Coinbase has a perp market, and then whatever like other exchanges have perp markets. FTX had a big perp market, and now HyperLiquid is like, okay, like we can actually, maybe you can build this on blockchains, and then other people can just route traffic to us. So like we kind of like break down this like siloed nature of perp markets, and rather like we just create one giant perp market, which I think is like the real innovation that will play out over the next kind of like couple years, month, whatever, with HyperLiquid, that it's like, oh, like we can just kind of like define these rules on a blockchain. Whether that's actually like I don't know, their like weird L1 blockchain that nobody really understands. It's like and only has like 18 validators as well. But in the end, like going back to like the perp definition, it's a like the same way that we talked about prediction markets last week. It's like people bet on real outcomes of real events. I think perps are like a way to basically bet on the future price of an asset in a like in a different financial instrument than you would do with like an actual traditional option that expires, or with a whatever the difference between the future and an option is. And in the end, it's kind of like the you can go long an asset or you can go short an asset. You can even just go like 1x long. Like you can essentially buy spot inside of a perp market, which is kind of like, why would you do that? But like you could theoretically do it. And then like you like if I go like, let's say I go 3x long ether, and then like basically there's a lot of demand for people to go long ether, because currently the market kind of trends towards like the general way of like ether being in a good position or something. Of course, naturally more people will long ether, so the price in the internal order book of the perp DEX or like the perp exchange will kind of like deviate from the spot price of ether, which of course is no good. And then in order to enforce like the index the index price of the perp exchange and the real spot price to go back into sync, essentially I will have to pay an ever increasing rate the more kind of the index price and the spot price deviate from each other. So like you sometimes see like perp funding rates of like, I don't know, like 100% over a year. Like if I keep that position open over a year, like essentially I'm just gonna, like, of course, like maybe it will oscillate back to like more reasonable funding rates, but sometimes we see extreme market conditions where essentially the mechanism of the perp exchange is trying to force people who have gone long to like either close their positions, or on the other side people to go short, because like if you go short, you're actually gonna get paid by the people who are long. So like the long, like if the spot, or if the index price has deviated from the spot price too much positively, then the longers pay the shorters, and the other way around. If it's currently kind of like the whole market is taking downturn, then the shorters will take longers if the index price has gone below the spot price. But yeah, so essentially, some financial instrument to like express an opinion on the future price of an asset. And I think the unique innovation here is that like you don't have like a 3x market and a 10x market and a 20x market, like 20x long, 3x long, whatsoever, 3x short, but rather like it's all just contained within one giant order book, and just like the size of the order book kind of like it scales very variably because everyone is just kind of like in the same trenches.
Yeah, I think they were originally introduced for like illiquid markets essentially, but the nature of like 24/7 markets of crypto make it even better than what they were originally like conceptualized for.
Okay.
Especially like with what you explained of like basically having it all in one order book. Um, and yeah, it's just more liquid, so everyone wins.
But yeah, we're just data analysts in the end. Go listen to financial engineers if you want to learn all about perps. This is the understanding we need for this conversation to continue.
So just to set it clear from all the stuff we mentioned, purpose is like forever futures. It's different from options because option we all have like options from the company we work at. It's not equity; it's an option. It's a, like a right to exercise something, to own
Oh
something,
yeah.
but it's not something that's like you deposit the money on the stake on the table and you may risk losing it, and you're betting on something. So it's different from options, but instead it's more of a future, and it's a future that never
Mhm.
ends unless, I guess, like different scenarios would be like you close the position, or you get liquidated, or like your money bleeds out from the deposit. So
Yeah.
that's like the way you end the, how to say, the perp contract. Otherwise, it never ends. Um, so yeah, I think that will set it clear. One other thing is like it's not equivalent to a leverage trade, because leverage trade can happen without a perp, right? Like you can always just like trade with leverage and like lose all your money, and like I feel like this is such a thing, at least in China, where you say the people the finance guy trades in Hong Kong, and like when they like lose everything, like in 2008 a lot of people like suicided like by jumping off like the really high rise, like that's such a thing about like leverage trades. My impression for leverage,
But
I
most
think
people use perps to like leverage trade.
perps
yeah, but
have
it's
leverage.
but it's
um
but it's like what we said before is the normal leverage is only possible in very liquid markets because they are, per leverage size market essentially. Things like perpetual contracts allow for the same order book to be across all leverage sizes, and therefore is just better in terms of liquidity. And that's why if you look on like BitMEX, originally they only introduced leverage for Bitcoin because it was the most liquid cryptocurrency, but then it eventually trickled into others like ETH, Solana, and stuff. um, HyperLiquid allows now for just even better, because now you can just about any token, not regardless of liquidity, but as long as it has some liquidity, it can have perpetual contracts, and the friction to that is just much lower.
Yeah, but basically, perp trading has leverage, and that's why like I was really shocked like a few years ago when I was just comparing the, remember GME? I think that was like a perp trading
Do you mean
product.
GMX?
GMX, sorry. Yeah, that
Yeah,
was like this number is way bigger than all the decks I'm seeing, because it's like kind of virtual number, right? It's leverage volume, the volume you see on perp.
Yeah, it's still like you still technically no, you're not trading the asset. Like you're trading a derivative, and like yeah, you can do like 50x leverages, and like I think also like a lot of these trades are like a lot shorter term. Like you're not buying a perp to like do a whatever 6 months investment. You're like buying a
yeah,
perp to sell it in a week or like 2 weeks, and like in
yeah.
the
Because
best case whatever 4 weeks. But like other than that, like you don't have like a perp open forever. Like this doesn't make sense.
the funding rate will trickle your money out over time as well,
Yeah.
so that's worth noting, obviously.
Yep. So I'm sharing this screen for the audio listener. This is the most, I guess, the most popular perp hyperliquid dash on Dune. But to be honest, this is the one I was talking about. If you look at here, everything everything is pulled from Solana. So we need a wizard to probably like pull some data there. But um,
What's wrong with DeFi Llama though?
Nothing wrong, but just like this is not even pulled into Doom because of comparison with others. Every stuff here is pulled from DeFi Llama. I'm just saying there's nothing wrong with DeFi Llama, but I'm just looking at here because I guess people can make more edits on top of the data to basically curating further analytical metrics that maybe DeFi Llama doesn't have yet. So I guess there's still utility for people to do stuff on Dune on top of DeFi Llama data. But over 24-hour volume, we see like HyperLiquid has 36% out of all the products being indexed. The second one is Lighter Perps, which is a super new product actually, launched pretty much like 2 weeks ago, I believe. And
A little bit more.
and Apex, or people starting to know it 2 weeks ago. I've only know it like when I saw Dona from L2Beats started tweeting about it, listing the metrics, and everybody's coming to me being like, "Hey, do you know anyone at Lighter? Our VC team wants to talk to them." And like I've heard like family office offered 3 billion evaluation, etc. But whatever. And so we have another like historical charts trend for all the perp products, and we can clearly see that like before 2024 it was basically DYDX and then GMX as well, but now it's kind of like trending down for DYDX, and starting from 2024 HyperLiquid really came out, and there's a huge amount of like variety of PerpDEX products now actually as well. I've also heard like there's 10 plus PerpDEX launching before even mainnet arrives, so people see the value of like just like how much revenue is generating right now. HyperLiquid leads the first position. Lighter Perps actually, okay, it data shows that it started even in April this year, so people just
Even
started.
earlier. Lighter started posting blobs because it's an L2 in January.
I see. Yeah, I believe from a quick download, I believe it's ZK PerpDEX, basically like using a lot of I think like ZK sync type technology, but also DYDX chain. It's a chain with a ZK proof on the bridge of holding, so it will help you to secure that the validators cannot just steal your money. I think that's like the premises of it.
They're using the DYDX chain?
No. I just using analogy. As in like
that would be a very weird decision. They have their own chain and they're posting to Ethereum mainnet.
Yes.
But
Yeah.
but I do think their tech probably borrowed maybe ZK Sync code, because I saw Dono said something like, like we reviewed the code and they took a lot of inspiration from ZK Sync. I think that's a polite way, probably saying it's maybe a lot of forks here and there. But
I mean, all of these ZK L2s, they're like, we're just gonna spread ZK technology to the world. That's our mission. So if somebody takes inspiration, they shouldn't be mad about it.
So I first need to disclose that Dragonfly invested in Lighter, first of all, but also that I think, the ZK is pretty cool. It allows for essentially posting just proofs instead of the whole data, and that's what makes it able to post on blobs and inherit the security guarantees of Ethereum. It's not like a stage one yet, but that's what they're aiming towards. And I think that's pretty cool because, if it shuts down, you can actually get your money back and stuff.
Mm-hmm. Yeah, so scrolling down the dashboards, I think here it's interesting to see like HyperLiquid TVL is right now around 6 billion. It's not a crazy number, I think, like compared to other like chain level, like say 13 billion or more for like Base and others. But it's definitely a high margin business, I believe. Like if you look at revenue here, I do like this chart where it shows the daily revenue, which shows that HyperLiquid is making around like ranging from 300K, but most of the days it's around like 2-3 million, up to sometimes 7.7 million a day. But there's another line chart here, layered on top of it, showing like the annualized revenue would be around 1.3 billion, 1.2 billion. So I think it's like pretty crazy for just one product. But obviously, I want to like also mention, because it's a chain, there's so many different front ends that has been building on top of it. So there's this other dashboard that's called Hyper Tracker. Pretty cool dashboards where they have all these like live data that is coming in. Breaking down the analytics by builder, I guess that's a concept of like who is basically settling all these like volume and like the traffic. And you can see here like the list of the builders, there's like 200 of them, and the number one ranked right now is called Based. I think it's like a front end that allows you to trade basically Hyperliquid perps. And the second one is Phantom, the wallet, and third one is in Silico, and we also see MetaMask on top of it, in high up in the rank. Actually, if I rank it for 7 days, I see that Phantom is number one in terms of yeah, in terms of I believe this is ranked by, yeah, it's ranked by revenue. 7 day revenue of Benton is 800K from Hyperliquid Perps. Second one's base, and there's MetaMask. There was a tweet from my colleague actually. Yeah, so there's this napkin mask from my colleague Mason. He was like basically looking at these charts. You would see that like MetaMask is making 13 million annualized from the perp revenue, and then 33 million annualized from the swap revenue, total of a 46 million annualized as a MetaMask total revenue as people can index. Phantom is making 55 million annualized from just the perp revenue. We kind of pretty much see that like the wallets who is the number one now, I feel like, from this number. But it's still pretty smart move, I think, like for MetaMask quickly like offering this feature for people. Obviously they should, because everyone who control the front end flow, they probably should capture the value from it. So but back from this like dashboards.
It is interesting because like it's quite a bit of revenue. I'm seeing on like Allium's dashboard for Hyperliquid, like it's like 3,700 users a day essentially for just Phantom. So it's not like a crazy. I would have expected more. And like in total, like builders account for like just 8,000 like users in total per day. I don't know.
Like
I thought it would
obviously,
be more.
yeah, even this revenue number here, like it doesn't even cover, like the Hyperliquid own front end's volume here. Like this list, I believe, is like everything besides their front end. Um,
Yes.
so number one is Based or Phantom, like flipping each other, and it's leading all the other one pretty far out.
I mean,
So
this is essentially probably the thesis that the Hyperliquid team had playing out, right? It's like, okay, we're gonna like, instead of building a perp exchange on a like centralized exchange, we're just gonna like kind of open up this technology. We're gonna have a giant order book. Everyone can integrate the order book. Like we're like very unopinionated on who integrates us, and like the keys are always with the user, and like all the like properties that like we like usually find great about blockchains just apply here as well. And it's like it's like another case of like blockchain really just enables like technology to really scale, or like for like, I don't know, go to market to really scale. But it's like, okay, like I'm now the platform, and like now I basically just become infrastructure for perps to exist. And like
Mm-hmm.
this is a great user experience for users of Phantom. This is great user experience for users of MetaMask, and so on and so on. And like now Phantom earns money from this, Hyperliquid earns money from this, and the users have access to more gambling, or like to perps, to more financial instruments, to put it like nicely. So like this is like actually genuinely, this is really cool to see play out in real time. And like, of course, like Aster's now, like Binance has basically seen this, and they're like I think Binance makes quite a lot of revenue with their perps usually, like just on their centralized exchange. So now they've kind of like stood up the team behind Aster to kind of like replicate this, right? And now it's like it's kind of BNB season because of that as well, because like of course Aster exists on BNB, so like now a lot of people are like bridging to BNB to like play around with Aster, like bet on Aster, like do whatever. Does Aster have a token yet? Does anyone know? Probably not.
No.
So that's why people are also like they're like basically sandwich vampire attacking, or not vampire attacking, but like they're attacking Hyperliquid by just like releasing a product, propping that up, and like it not having a token. And does the Binance like centralized exchange route anything to Aster? Does anyone know? Because that would be
I believe
crazy.
that's a bit fuzzy. We're not too sure, essentially.
Okay.
And like Aster data is just weird to come by. Essentially, it's not really clear as HyperLiquid is.
Yeah, I'm still showing this dashboards, and because that's one thing I was gonna like mention about, which is here in one of the table, they're basically listing all these like average 7-day, 30-day volume and open interest. It's actually metrics we kind of mentioned it in last episode about prediction market. I mean, essentially, Boxer made an analogy that like purpose is kind of like a betting basically anyway. But like you see here, like the top one is HyperLiquid, and then there's Lighter, there's EdgeX. I believe there was also Aster. Oh, I know why. Because over the weekend, I believe I saw a tweet from Xerox NGMI, who's a guy behind DeFi Llama. He mentioned that like because Aster number are right now very likely highly washed, or they just don't really feel very confident about the number. They kind of removed it, and that's why this Dune dashboards now doesn't have Aster because it's pulling from
The,
DeFi Llama.
I think
But
like they are able to get Aster data in aggregated form, but
mhm,
essentially DeFi Llama does some wash trading filtering on
mhm,
the data as a as a general rule. And since they can't get granular data, they're not able to do that filtering, and therefore they're refusing to list
mhm.
data that they may see as they're not essentially confident about.
Right.
Wait, can you pull up the thread then?
Yes.
Because I think they're also only getting like aggregate. They're getting so much aggregated data. Like so often, if you go to DeFi Llama and then you click on methodology, it's just like, oh yeah, we're calling like some API endpoint. I'm like, okay, great. But usually those teams like they have an interest to like be honest. And I think in this case, it's just like basically Weeks and not gonna make it has just called out Asta for like, oh, we don't believe this is correct. Like it's just like, okay, there's like some fuckery going on here. Whether that's like hardcore, like whether it's wash trading, I don't think they actually apply like a wash trading filter. Do they just like apply wash trading filters to DEX trades data, for example?
DEXs, I'm not sure. I know for NFTs they ported over my method
Okay.
like 3 years ago that I
Yeah.
posted on Dune. But here the weird part is also they like there's not necessarily a universal wash trading method, filtering method across all things. But here I think the research is quite interesting, and it's basically saying that looking at Aster volume, it really closely mirrors Binance Perps,
Yeah.
and therefore it's not really clear like how much is actually Aster only, how much is Binance, how
Yeah.
much is both. It's a bit weird, and I think
Because
that's
like
actually
essentially someone can just go long on Binance, go short on Aster, and then just like add infinite, like just like basically even out their positions all across all the different venues. And then like, because of that, like if the volumes look different, look the same, like what the hell, like obviously somebody's just
yeah.
manipulating the market here, which yeah, in that case, like fully reasonable to kind of like exclude this, especially like I don't know.
This whole perps thing also bred a new research, something new, which is like I don't know if you saw yesterday, founder from Limitless tweeting about how Binance is pretty predatory for their listing fees, and that how they're basically asking for like 8% of token supply to get listed on Binance, whereas Coinbase is reportedly saying just build on Base and we'll list you. And I think this conversation it seems to be true. I've heard others reporting that they've heard from several podcasts that it's the same thing. Although Binance kind of denies it. I don't know. It's a bit weird. But I think the emergence of things like HyperLiquid essentially allows for the tables to turn, and now maybe sexes are no longer going to be the dominant place in the long term, and therefore when you're launching a token, you're no longer bound to their rules, and yeah, that's kind of cool. I don't know. Do you guys have thoughts on this?
I think like perpetuals and leverage trading are like the last bastions. How would you say this? The last like area where centralized exchanges are really good. So at least that's kind of my and like of course you need an on and off ramp, but like any centralized exchange is good at this. So like I don't really care. So I think like the proliferation of perp DEXs And now they've like really hit the mainstream. I mean, we already had like a GMX hype like 2 years ago, but now it's like the volume is so big. Like basically, this will just be another nail in the coffin of centralized exchanges and CeFi, and it's better if things move on chain. So I applaud the HyperLiquid team, or anyone who builds a PerpDEX. To be honest, like it's with that, I think that's our short excursus into perps data, in which we first try to define perps data for the first 15 minutes, which is also a fun exercise. With that, I think that's it for today. And you've listened to the Index podcast. Thank you for listening, and see you next time. Bye-bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar, we call them out and set chart crown on fire.